Hello, and thank you for joining us today. I'm Taylor Combeluzier, a mining analyst at Red Cloud Securities. Today's webinar features Aeris Resources. Aeris is a mid-tier base and precious metals producer that has a portfolio that includes 3 operating assets and 1 development project, all located in Australia. The company has successfully extended the life of mine at its cornerstone Triton operations. As well, its other operating assets include the Krakow gold operations and North Queensland copper operations. Aeris also owns the Stockman copper zinc project, which is an advanced development stage project located 300 kilometers northeast of Melbourne. It has a 10-year life of mine and all primary approvals. A definitive feasibility study is expected for the project. As well, the company does own the Jaguar zinc and copper operations, which are currently on care and maintenance. Today, I have with me on the webinar André Labuschagne, who's the Executive Chairman at Aeris Resources. Welcome, André.
Thank you, Taylor.
So the format of today's webinar will be comprised of 2 parts. In the first, André will provide an update on Aeris Resources, and then in the second part, we'll take your questions live. So please send them in using the chat function, and we'll get to as many as we can. I'll note that you can type them in at any point throughout today's webinar. To start, we'll handle the disclosures. So for Aeris Resources, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the company presentation located on its website. For Red Cloud Securities Inc., I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. And we note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Aeris Resources specific disclosures. So with that out of the way, I will turn it over to André to update you on the company and what you have to look forward to.
Thank you, Taylor. And thank you everyone for joining this webinar. Just a bit of clarity. So the numbers are, if I quote numbers in the presentation, will be in Australian dollars. And just for information, our financial years in Australia runs from 1 July to 30 June every year. A bit about Aeris. As Taylor was saying earlier, sorry, just get this. There's the disclaimer. Please feel free to read that. Getting into the business. So 3 years ago, Aeris was a $20 million company with 1 operating mine called the Triton Mine, which you can see on that slide. It is a copper mine producing around 20,000 tons annually. Historically, in the last 2 years, we've invested a lot of money to start up new mines, and in this financial year, those production from those new mines will kick in, and we'll see a jump in production from 17,000 tons of copper last financial year to close to 24,000 tons this financial year. And we'll go into a bit more detail. 3 years ago, as a $20 million company, we bought the Krakow gold mine from Evolution Mining. That mine produced around 50,000 ounces of gold. And at the same time, when we bought that mine, we discovered a new deposit at Triton, and the market cap or the share price of the business started to improve drastically. And by the end of that calendar year, we were actually debt-free after the 12 months of owning Krakow. So Krakow is one of those little gold mines. It has got 2 or 3 years mine life, but it's always had that sort of life as long as you're willing to explore. And I will get into that a bit more. So 12 months ago, we then looked for further growth. We bought a company called Round Oak, and Round Oak had 2 operating assets and a project. The 2 operating mines, one was the Mount Colin copper mine in northwest Queensland. That mine do about 10,000 tons of copper, a very small underground mine with a toll treatment arrangements. It is in the final stages of production. It's one of those assets currently generating good money, and because there's no capital to spend, and it actually generates money which we then use to invest into the Triton operations. We also bought the Jaguar copper zinc mine in Western Australia. That was running for 12 months. We have made the decision in July this year or June this year to put the mine in care and maintenance, with the aim to bring it back into production in 12 to 18 months. And we'll look a bit more into the details, what happened there, but also how we see that mine with a substantial increase in production going forward as we bring it back into production. One of the key reasons why we bought that business was for the Stockman project in Victoria. That's a copper zinc deposit. It has already got a 10-year reserve life with grades sitting close to 3.5–4% copper equivalent grades in the ground. So quite a high grade mine, already got a more than 10-year reserve life. And we're in the process of finalizing that study to bring that project to life in the next 2 to 3 years. So substantial growth over the last 3 years. We've seen the business growing from producing about 20,000 tons of copper. This year we're forecasting around 50,000 tons of copper equivalent production if you convert all those production to copper. Unfortunately, when we announced we will put the Jaguar mine into Cairn Maintenance, and when we did that, we did also put in a debt facility to facilitate the controlled closure of that business. And our market cap has come down significantly in the last 2 or 3 months, down to 125 million as of yesterday. We run a fairly small board with really good technical directors on, and the senior executive team, Rob and Ian and I have been together working from previous businesses together. So we've been working together as a team for over 14 years, and Kim Franks, who joined us 2 or 3 years ago as from an HR point of view. So pretty small team, very much focused on delivery of the operations, and has worked together and for a very long time. On the sustainability front, I'm not going to go into too much detail, but a lot of work has gone into the business. We have decided as a business to focus on 4 key areas, which you can see on the screen there. And for example, on the water, we know water is a critical part of the business. About 3 years ago, we nearly ran out of water at the Triton operation. We had to put emergency pipelines in place and work our way through the water management at that mine through a drought in Australia. And then the other 2 pillars or 3 pillars is all about how do we run this business in a sustainable way, but also really focusing on those 3 areas. Get into the mines a bit, and I think this is where you can see the business, how, for example, Triton has transformed over the last 2 years. So in that little image in the middle, you see Triton, the Triton underground mine has been going for a very long time. It's getting deep, and as we got deeper, if you mine the whole ore body, try to maintain 1 million tons, your grade drops off pretty fast. So one of the key decisions we made is, how do we improve the overall grade in the business? Because we will mine 2 to 3 mines at any time to get the 1.8 million ton plant to about 1.6 million tons. So about 18 months ago, we started the Budgerygar development. So you can see that little deposit, which just hasn't been drilled. We believe it will continue at depth. Now you're replacing 1.2% copper at Triton at depth down the bottom with 1.8% copper at the top in that in the Budgerygar deposit. That we had a bit of a delay in putting the ventilation shaft in place. That is now in place, and in FY24 we see the ramp up of production coming in from that specific Budgerygar deposit. So you'll mine the high grade focus now in Triton at depth, and you bring in Budgerygar as a new mine at significantly better grades. At the same time, we invested in the Bokeh tank mine, which is a significant improvement in grade. It's running at about 2.6% copper and nearly 1 gram a ton gold. Now we do get all our gold byproducts. So this mine is also similar to Budgerygar. We've put the vent shaft in, has been included in the last, has been finished off in the last 2 months. And in FY24, we're seeing these high-grade deposits and mine coming into production. So overall, that is the reason why Triton will go from 17 to 24,000 tons within this financial year. Then on top of that, we have discovered a deposit called Constellation, as I said earlier, about 6 months after we bought Cracow. This is through greenfields exploration on our tenement package towards the north of the operations. This deposit has grown significantly in this period. It's already a 7 million ton, 1.85% copper plus really good gold grades. It will be a small open pit mine to kick it off, and then you'll go underground. As we speak right now, we are drilling the deep end area of this deposit down the bottom. We have seen some spectacular intersections. You can see that one intersection at 25% at 3% copper, or 25 meters at 3% copper. So this ore body extends. You can see those EM plates, which has been identified. We got no doubt that this ore body will extend. What is pleasing is that drill hole where we just drilled is one of the best intersections we've had, and especially at depth. So that is, we don't know what it's going to be. We're drilling 2 or 3 more holes, and that's all about extending that resource. We can see this resource easily extending to a 10-15 million ton resource, and will become one of the future mining projects for Triton. So as we mine Budgerygar, Bokeh Tank and Triton, we'll bring this one into production, and you'll see an extension of this mine life. Now, it's interesting, this Triton mine, 10 years ago when I joined this business, we would have said there's 4 years life. And today, 10 years later, we're saying, look, we think there's 7 to 10 year mine life, especially on the back of this discovery and bringing this mine into production. Then on top of that, as you can see there you can see this is where the Triton mine sit, down sort of halfway down in that slide. And then we're mining the Murrawombie Bokeh Tank mines, and then the new discovery. As you can see, we're busy doing an EM survey towards the north. We've identified 14 new targets. Now that's exactly how we discovered Constellation. So we're quite excited about those 14 anomalies, and we will start to test them in this financial year. We will probably drill a few holes in some of the higher priority targets. Moving on to our gold mine. As you can see there, that's the plant, do about 600,000 tons per annum. That sits in Queensland. It is a well looked after, well capitalized process facility. We're mining in, as you can see on that image, we're mining that western vein field, and that has been going for a long time. It's a narrow vein, high grade mine. As you mine and you keep drilling and exploring, you bring reserves in. We are also now looking at the Golden Plateau deposit. We're busy drilling that deposit out with the aim to bring that into production in the next 2 to 3 years, which will then see again the extensions of this mine life. This financial year, we're investing close to $20 million to do another tailings dam lift, which will give us an additional 3 years life for tailings deposits. Now, the biggest exploration upside, I might just jump to the sort of the biggest exploration upside for this mine is sitting in this southern vein field, and I'll touch on it in one of the next slides coming up. The southern vein field, as you can see, this is a western vein field. This is where it's been mining for already 2.5 million ounces has been mined out of that, just that area, and then Golden Plateau towards the east. But as you can see, it is moving towards the south. It hasn't been tested before. We're doing all the different science to identify where's the target areas, and we will start to do some drilling in this financial year to start to test. That's there where we believe you can find the next western vein field. And once you find that, you're away again for producing significantly more ounces for a much longer life. So for us currently, we see Krakow as a great option play to actually keep on investing and exploring in this southern vein field, which we believe there's a likelihood to find something substantial. And then you've got the assets, you've got the plant, you've got the tailings capacity, and you've got the capacity to actually extending this mine life significantly. Moving on to Mount Colin, in that image you see on the screen, that is the full footprint. It is a small underground mine doing about 40,000 tons per month. It is running at grades of plus 2% copper. The capital development has been done, as you can see in this image. All the development is done. We're basically just extracting ourselves out of this mine, and there's probably another 10 months or so left. The process we follow is we mine it, we put it on trucks to the Ernest Henry mine process facility, we pay them to process, and we get our gold. So it doesn't have infrastructure. So from a rehab point of view, very small footprint, not an expensive exercise. The aim for us is to duplicate this model. Now, Northwest Queensland, for those who don't know, is one of our best copper regions in Australia. There's a lot of other opportunities, similar size and obviously bigger. But in our own portfolio, we have the asset called the Barbara project. That is about 60 kilometers from Mount Colin. That has been mined before as an open pit mine, as you can see in that image. We are planning to go underground, so we're going to duplicate what we've done for the last 4 years at Mount Colin, move the camp, move the contractor to Barbara, and then do exactly the same. So currently there's a 2.2 million tons at around 2% copper. That is open at depth. So the current work we're doing is we finish off the feasibility study, get the approvals to get Barbara up and running, and then we will move from Mount Colin to Barbara and follow exactly the same process. At the Jaguar mine, that's in Western Australia, and you can see very different country than Queensland. This mine is a copper zinc mine which we bought at the last acquisition. When we bought it basically for this deposit down the Bentley Mine, which is called Turbo. Now, since we bought it, we doubled the size of the Turbo deposit through drilling. In the last financial year, so around February, March, this last financial year, of this calendar year, we've been mining this area. We had a few seismic events which slowed down production and specifically development. And it's not the seismicity is normal for this mine, but it did slow the production down. But when we started to look at how do we bring that Turbo deposit into production, it became clear to us that in FY25, so the financial year we're in, if we just do the development and try to get down there, you'll have to halve your production, and to get there, by the time you get there, you pick your production up again. But if you halve your production, you just can't cut your costs fast enough. And then, so you might lose operating cash, and then you get to the mine, and then you make money again. And we decided that there's other opportunities in this business because it's got 3 other known resources which you can bring into production. And the whole aim is that plant can do around 650,000 tons, and we only utilize it to about 500,000 tons. So we decided to put in care and maintenance to preserve the resource. There's 8 million tons in resource left in these mines. And the aim is to restart this business by starting the Bentley Mine and the Jaguar Mine at the same time. So you can see we've got Bentley, we've got Jaguar, we've got the Triton Ball Pit and Triumph. And that all is at 8 million tons sitting in those ore bodies. So the aim is to close the mine down, restart the mining 2 mines at any time, put the production up to 650, and you'll produce about 20,000 tons copper equivalent production with a significant mine life. So we believe that was the right decision to make. The feasibility study is underway, and the aim is to restart this mine doing the Jaguar underground mine. As you can see on that image, that is the current Jaguar deposit. What happened with this mine is basically the previous owners discovered the Bentley Mine and they walked away from the Jaguar mine they were actually mining as an underground mine. You can see there 2.28% copper with 4.6% zinc. That is close to 4% copper equivalent in-ground resource. So it is a much better copper resource, the Jaguar mine, and starting those two together will give you that additional value to bring those two into production, and you'll have a significant longer mine life. So we believe that was the right decision, although the market didn't appreciate that at the time. But I do think that this can become and will become one of our key strategic assets in this business going forward. On top of that, it sits in one of the best gold exploration regions with the tenement package. There's about 25 million ounces of production around us. And it is also hosting good VMS base metal targets. So we are pretty confident. And one of the things we have done while we're putting it in Cairn Mountains, we kept the geology team to make sure we keep progressing some of these exploration upsides. And from what we've seen, this is one of our best exploration packages as well in the business, and a lot of excitement around the potential. Moving on to Stockman. So Stockman is the project which I said earlier we bought as part of the acquisition. That photo there is a photo of the current tailings dam. So it is an historic mine, or there's an historic process facility, let's put it rather that way. We already got the approvals to reuse that tailings dam. We've got the approvals to the mining lease approvals. We got all the key approvals. And this project, the current PFS we're working on, will see a plus 10-year mine life. It's got a 10 million ton, close to 3% copper equivalent recovered in a resource. So for us, it's about how do we get this in production. We're busy finishing off this feasibility study. We might extend the study to do some more technical work because there's a lot of new technology these days which will improve the recoveries of this deposit. And then we will bring this into production, in a pipeline of the various projects we have. This is just a simple layout currently, so you can see a pretty small footprint. It will be one larger underground mine sitting basically on the side of a hill, so not a lot of capital investment to develop 300 or 400 meters down. And then there's a Wilga mine which has been mined before. So this is an old mine. This is a brand new setup in how we will run this business. So pretty simple, pretty straightforward flotation circuit. And as I said, we are looking at technology to see if we can get a smaller footprint, but also better recoveries. So I guess in summary, we have got 3 operating assets. We do about 50,000 tons copper equivalent this financial year. But if you look a bit 2 or 3 years down the line, Triton, once you start up Constellation, you can see Triton moving up from the 24,000 tons copper currently in production. If you restart the Jaguar mine, you're looking at 20,000 tons copper equivalent production for more than 6 or 7 years, probably more than that. And then you bring the Stockman mine project into production, which will do about 30,000 tons of copper equivalent and have 10 to 15 year reserve life already. So those are the 3 key assets in the business right now. And then Krakow, using that option to keep exploring, testing that southern vein field, Krakow can very easily become one of the big operations. As you would have seen through the presentation, each one of these mines has got a significant greenfields exploration upside, and also each one of all these deposits do extend at depth other than the North Queensland assets. So there's high likelihood, or these mines we started at Triton, as we've seen with all our other deposits, keep extending down plunge. And I do believe what we have got now, as I said earlier, the share price is not where it's supposed to be. But if we can deliver a few good quarters against our guidance, we deliver what we said, I do believe there's significant upside value. And then as a business right now, it's got an excellent platform to do further growth and optimize our portfolio. Thank you very much.
Perfect. Thank you very much, Andre. A great presentation. So now we will turn to the Q&A portion of the webinar, and just a reminder to everybody on the line that you can type your questions in at any point. So to get things going, I guess, let's start with Constellation. You put out drill results there recently that showed some higher grades than the resource estimate there. Do you expect that you can continue to kind of replicate that, or is this just kind of some higher grade pockets that might not move the needle overall?
No, look, I think that we do believe it can be duplicated. If you look at the results we've seen above where we're currently drilling, we've seen some really good intersections there as well. So what we're trying to do is just test it down dip a bit. There's also we call it a stand-up zone, which has been identified higher up through drilling, which we haven't really tested. Now, the current plans are to test if that continues further down. If that does, it will turn this economics of this project upside down, because it will create a lot more value in that area. So in this financial year, we'll keep drilling. We allocated about $10 million to drilling that deposit out to make sure we get the confidence up. We can finish off the feasibility studies and start working on the execution of starting up that mine.
Right. And what proportion of the total exploration budget is that 10 million at Constellation?
Basically, that is the $10 million is about 80% of that is allocated to Constellation.
Right.
And then there's money allocated, where I talked about that EM survey we've done further north. There's also money allocated to do some work in that area.
Okay, perfect. Okay, so I guess just looking kind of at the copper price environment right now, as well as kind of where equities are sitting, how does that look in terms of potential for acquisitions out there, potential assets to grow the business? What's the environment out there? Is it attractive right now for you to be looking at stuff?
Look, we always look at opportunities. I think for us, as I said, over the last few years, we've done significant growth. The aim is every time you grow, you upgrade your portfolio. You don't want to go backwards. So we're always looking, but we also recognize that within the business, with a potential restart for Jaguar, getting Stockman up and running and expanding Triton, the organic growth is significant within the business. But that said, in the environment we're in, everyone believes copper is going to go up. No one knows when, but we all think it would. Setting yourself up as a copper producer and with long life assets is really the way we look at the growth side of the business.
Right. Okay. And and then in terms of I guess right now, kind of, with the issues at Jaguar earlier this year, is there ongoing cost control that you're doing?
Yeah, look, we always really trying to get the cost and look at cost. We always run cost optimization projects. We have, as part of the growth, we've set up a very strong technical team to assist with how do we optimize mining plans, how do we optimize structures. With the Jag closure, we are, instead of parking up those trucks and let them sit for 12 or 18 months, we're actually reallocating the assets to some of the other mines. So that, again, helped out with the productivity and efficiencies of those mines. But as a business, these mines need to be worked hard, and you always need to look at opportunities. As we all know, the inflation environment the industry is working in has been short of being scary over the last 2 years. So to counter that, you always need to look at productivity and improvements in costs.
Right. Okay. So we do have a couple questions here just pertaining to the Stockman project, and do you see any issues pertaining to the environmental permitting side of thing, and what parts of that process still need to be completed?
So look, we have got the environmental approvals already for that. So the EIS, what we call it, has been done. The mining lease has been approved. one of the key things we need to do, which we are busy securing, we got in Australia, and I think it's on your side of the world probably the same, you've got biodiversity offsets. So as you would have seen in that image I put up, it's actually in the bush. For every big tree you cut down, you need to put 7 trees into a controlled biodiversity offset. So you need to get land and lock that up for a 10-year plus process where you can't touch it. Now we've identified the areas. We own some of our own properties and land out there which we will put into biodiversity offsets. But it's been identified and ready to be secured, but you want to make sure the project study is done before you really start to invest in those biodiversity offsets. So to answer that, don't think there's an issue. Don't think it is just about going through process. And the key thing we're working on now is the minor approvals, the water use, the sewage, and those normal small things. But the major approvals has been done.
Okay, perfect. And then in terms of switching gears here, just on the I guess corporate level, in terms of current working capital and such, you did take out a credit facility recently. I think that was largely earmarked for closure at Jaguar, tailings dam at Krakow, and drilling at Constellation. Is that
correct? So one of the things when you run these base metal mines is your working capital movement is quite large. So when we made the decision to put Jaguar into care and maintenance, by the time you put it in care and maintenance, it will cost you $30 million. You need to do your redundancies. That's about $10 million. Pay up all your creditors and clean it all up, and then you put it in care and maintenance. So for us to do that at the time, the working capital in the business was not strong enough to do all of that, and we did go out and we put the facility in place to help with the working capital. And as you said earlier, it has been used to do that closure, but it's also we're putting $20 million into Krakow with a tailings dam, and we also got that drilling plan for most of that is self-funded in any way, but it was just we needed to put the working capital in the business to ensure we can do a proper controlled closure of the Jaguar mine to ensure you can bring it back up.
Okay, and then I guess in terms of kind of where current price levels are at right now, or kind of what you're forecasting with guidance, what kind of free cash flow or EBITDA are you looking at kind of at this level with current operations?
So the current operations at sort of a high level, Triton will generate good money this financial year because it's doing that 24,000 tons. The Mount Colin mine generates good money. It's at that closure phase, and then you've got we're investing in Krakow. So Krakow over the 12 months gets sort of to a break-even position or close to a break-even position. So overall, you do generate good cash in the business, but we have made good investments or still making some investments into the business. So look, it's all price dependent. I can't give you we're making $40 million because it's all driven by price. But the operations do generate cash and self-fund the capital, especially Triton and Mount Colin, while we investing in Krakow.
Right. Perfect. Okay. So I'll just put out kind of a final call out for questions to the audience, and maybe while we wait for any last questions, maybe just could sum out by outlining key catalysts or 3 key things that investors should be looking forward to in the near term.
So I think the 3 things for us, the FY24 guidance numbers are out there, so it is available. The key things which from a catalyst point of view, that's sort of what you're asking, I guess. The Constellation update as we draw Constellation out will be significant because as that grow, that it improves the value of Triton. The restart plans for Jaguar will be something we will share with the market because I do think once we start that up, it will look a lot different and a lot better in terms of comparing to what we bought. And really it will just be then achieve what we said, get the production numbers and achieve those. and we will keep the market up to date on all the exploration success in the business, which will be quite significant. Once we've done the Stockman study, we will share with the market our thoughts on the way forward for Stockman. That should be within the next 3 months or so.
Perfect. Yeah. So it sounds like a good opportunity to get in ahead of some big catalysts that are coming up and kind of a fresh take on everything.
Yeah, look, this is sort of at the end of the day where we were. I mean, this last 52, if you look at the 52-week high was 70 odd cents, and where we're trading today, we have gone through some challenging times. I'll put that out because of the delays and everything else. But I do think if in the longer term we've got good projects, it's setting them like Triton, Stockman, Jaguar up, and then the upside for Cracow. It can become a pretty substantial and very good business.
Yeah. Excellent. Okay, so I don't see any other questions here, so I think we'll leave it there. So I would like to thank André from Aeris Resources for taking the time today to host the webinar with Red Cloud Securities, and thank you to everybody on the line for tuning in with us.
Thank you very much. Thanks, everyone. Have a good day.